this premium video off with a little reminder that even within the '08 financial crisis, we had record up days. And so do I think something like this puts in a bottom? Not even close, gang, and I'm not being a pessimist. Let me give you something to think about for a minute. Our neighbors to the north, Canada, had initial claims of 900 and I believe 39,000. Okay, 929 or 939,000. All right, let's call it 900. I know it was more than that. 900,000, almost a million. Their typical jobless claims, initial claims, are about 27,000. All right, now take that at scale around the globe. We are not at the bottom, gang. Okay, so today was a great trading opportunity, and let's talk about it in light of that. Okay, so first of all, we have the criteria that was met. A little bit of yen weakness, not quite the middle of the road yen that we had on Monday, but a little bit more committed weakness in the yen during the opening hours of the day, where the yen was the third weakest and the second weakest, and as the day progressed became the first weakest currency. The yen was certainly telling us it was weak. It may not have been as weak as we typically like, but there was no doubting the yen weakness, giving us the okay to get bullish. And so one of the questions I get a lot of is, well, Raghi, why do we rely on the yen like this? And we rely on the yen like this because the flow into the yen or out of the yen tells us a lot about risk appetite or risk aversion. And that's really sort of the synthesizing it down to the very basic core of what it is. If the flows in or out of the yen, buying or borrowing, tell us a lot about where money is flowing on a given day. And a weak yen bodes very well for equities and equity indices. So bullish we were. I mean, was that it? Of course not. What else did we look at? And by the way, the notes that I shared with you all, I have this little day trading checklist in there. We were above the VWAP, anchored VWAPs, all three of them. We were plotting mostly green grab candles. We were above the mean of the V-score. We were well off the extremes, the V-score extremes. We're well off those. We had price action punching up to higher highs. We had the yen weakness. So all of that put together. One thing we did not have, and one of the reasons you did not hear me talk about afternoon volume weighted average price entries confirmed with the V-score, was that we never did get our initial balance breach. Never did happen. Now, it has to happen by a very specific time. So because it did not happen by 11:30, and you'll know because if you set your Waikiki, this is the TOS platform, to 60, if and when we were to breach, there would be a vertical line that told us there was a long trade trigger. Now, it's not technically a long trade triggered, but the initial balance breach would have then opened the door to VWAP buying. We did not get that, gang. So could you have bought off the VWAP? Well, sure. But here's the reason we like the initial balance breach. It's about probabilities. It's about percentages. In other words, when we have the initial balance breach by 11:30, when we get moves like this, they tend to really be solid and they tend to bounce pretty darn well. When we don't have the initial balance breach, we see things like this. They're noisy. We get down below the VWAP. We start plotting new V-score lows. And yes, while as long as we are above the clearing range low, which we remained above, as long as we are above the clearing range low, no problem, we can remain bullish. Look how much more noise we have when we didn't get the initial balance breach, okay? So that's why you did not see me talk of afternoon VWAP buys. Now, did we want to short? Of course not. That particular initial balance criteria is meant to keep us from over trading. Or for those of you that are a little bit more advanced and decide, well, I'm going to take that VWAP buy anyways, you're prepared for this kind of noise and it's not going to be shocking and it's not going to get you short. All right. That is the main thing. We had bullish directional buys and we wanted to stay long. And as long as you stuck with that, I think you did absolutely fine today. So once again, getting that directional bias set early by the market meeting the criteria that we're looking at was vital. In fact, it was the difference between flipping around long, short, or staying long, staying right, and making some profit. So that was the intraday ES and Q. And if you're with me this morning, things were happening pretty fast, and we still had sort of looming over us the expectation of this deal to be signed. And of course, good news about the deal kept the market moving higher. Concerns the deal may not be signed could send the market moving sharply lower. And days like that are most certainly caution days. In fact, there's almost a reason every day to treat the session as caution days. And so some days I feel really confident about the levels, they're solid, and I'll send them out as day trades, knowing that many of you are taking these remotely and are not in the chat room with me. But when they're going to be riskier and they're going to move quick and news could turn us on a dime, we want to, I really want you guys in the room with me so I can walk you through these things. But these were specifically the trades in the room today. So that was the V-score. Now, another thing, and I sent out an update, an opening session trade review. So do check that out. I know it ran about 16 minutes, so that's a lot of content to consume today, but a lot of you are working from home, a lot of you are home, so, if I can throw some more content out to you guys to consume, I'm going to try to do that and really make this time as educational and explain as much, give as much transparency as possible. So do check out that video, and that'll explain a lot of this. But I do want to dive into the pound US trade we talked about, as well as the bean trade. All right, pound US. We had a 15-minute uptrend that was correcting at the time into almost a 117 handle. And that was earlier this morning, 15 minutes. So let's zoom in a little bit. And that was right in here. That was when we were talking about that, right in there. So it pulls back. As long as it stayed above 117, we're really happy. 1695 could have been a stop. Realize the lowest that we ever got was 1696, which is really close. But I mentioned the tight stop was 95. Preferably, we were yet another 20 pips below that. So not a bad little trade there. A little bounce there, 15-minute day trade on the pound US, really good one-day relative performance contrast, right, for our day trade watch list. Now, we also were talking about beans today. In fact, the ag trades in general. And I love the idea of getting short beans on the daily time frame. The reason being it's a double red. We've traded up into the wave, and we know that today's candle is kind of pushing slightly higher, which is fine. We're looking for a trigger between 878 and 889. We want to buy puts on the ZS bean contract. We want to buy puts. Now, I will tell you, those puts are probably going to run you about $1,200. But remember, the $1,200 is going to get you the May contract. And, compared to the initial margin requirement and the unknown uncertainty of risk by trading the underlying contract, the $1,300 for the put versus about $1,800 or $1,900 initial margin requirement for the actual futures contract of soybeans, I think is actually a pretty good trade-off. Not only in capital that you need to commit to the trade, but also the risk. So that is the soybean trade. All right. Now, yesterday, both in the premium video and in the free video, I talked about gold. I talked about wanting to short gold. And I wanted to see a little candle, a smaller candle trade like in this area. Well, clearly, even before the bell rang, we knew what kind of candle we had. And I want to mention that bottom of the range, this, is now taking us to the top of the range, this. Now, even in the free and premium videos, I said, I'm open to shorting here. We never got the shot at doing that. And I'm open to shorting here or buying puts. But the better trade, gang, is to be long at the bottom of the range. We want to be a buyer here. B stands for buy. We want to be a buyer there at the bottom of the range. So I don't want to buy up here. I don't want to buy after an incredible day higher. In fact, a lot of you liquidated calls, bought in the bottom of the range and in other places today. These are choppy markets. And the top of the range is resistance and the bottom of the range is support. And because the trend that preceded this chop was up, all this, I would prefer to build positions on weakness and towards that support. All right, so let's see if we do snap back or not. Longer term, even though I was talking about a very short-term short in gold, which, by the way, I'm still looking at that same pattern, that same type of setup. Even though I'm looking for a very short-term short in gold, I'm very opportunistic because that short-term short could lead us to the support level that we ultimately we'd be building a long position on, where I do anticipate eventually gold trading above 1700. Now remember, any of these limit down days, and I don't believe they're in our rearview mirror yet. I still believe we are absolutely capable of limit down days again, and we're going to see gold get liquidated on those. So be really careful. I don't think gold is out of the woods because I don't think this market is yet. Okay. Now, yes, the market rallied, and I think that's great. And I think that also because we did not get the market sort of get the confirmation of this stimulus bill, right? We kept hearing it was on the 5-yard line, then the 2-yard line. And my gosh, we don't actually have it yet, but the market bounced in anticipation of it, which means what? What does that mean? It means I would love this thing to rip higher tomorrow, preferably into even something aggressively like the 13. Heck, if we get one of these great big candles that takes us to the 21, awesome. That will be the gift that is going to give us a heck of an opportunity to buy puts and get short the broader averages. So I'm not bullish. We have a double red market. Bounces higher are going to be opportunities into bullish momentum, into resistance to buy puts. It's going to be the case on the ES. It's going to be the case on the NQ. It's going to be the case on the YM. It's going to be the case on the Russell. The higher the bounce, the bigger my smile, because that is going to give us a better entry short. And I still think we have a bounce waiting. Not a huge one, because the market did so anticipate possibly hearing about the deal being signed during the session today. So likely we'll hear something after the open tomorrow. I'm sure the scheduling, the release of the news is going to be for optimal market bullishness, no doubt. And that means we still might get a little bit of a rally. And if we see higher highs on the news. Now you might say, well, Rob, what are you waiting for? Is it the 13? Is it the 21? Well, yes. I mean, there are price levels that I'd like to see this bounce up to. But really, it's more about the event. It's really more about let the market finally get the news that it's been gearing up for. Let it get confirmation. Let it get detail. And then we will fade that bullishness. What does fade mean in this situation? We will sell into that strength, or more accurately, we will buy puts in the SPY, QQQ, DIA, IWM, or the NQ and ES futures options. We will get long puts. We will buy puts into that rip higher. Okay? There is a lot of optimism also, gang, about the fact that even though the numbers are still, there's still new cases of corona in Wuhan, they're going to open up on the 6th or something. They're going to open up the city. There's conversation about how quickly would the U.S. open, which is laughable, gang, because I know it doesn't feel that way, but we've hardly even closed. The airlines are going to get their bailout, which is why now they're talking about shutting down flights. We have yet to see that happen. We haven't widely shut down, and yet we're hearing talk of the U.S. being open by Easter. So I'm not here to make any medical judgment on that, but I can't even begin to say that makes A, sense, or B, that's going to somehow keep us from seeing for many of you, and even myself, some of the most unbelievably bearish and the numbers we're going to get, non-farm payroll, initial claims, GDP, ISM, CP. I mean, they're going to be numbers like you've never seen. Frank, I'm not trying to be a fearmonger. It's just a fact. And this market rallying today the way it did on the backstop of the government stepping in and bailing out whomever they're going to bail out is completely ignorant of still the numbers and what we're going to see from the coronavirus. So '08 had moves like this, gang, and then they made lower lows. Okay, so if you're running a playbook of history and you said, I've seen this show before and I know how it ends, and we're not even mid-movie yet, okay, please be patient. Can we trade this to the long side? I think you guys who joined me this morning, we had a tremendous time trading this to the long side, right? It was nothing but buys as a day trade. And we'll probably have a similar situation tomorrow when I'm with you in the chat room, okay? So keep that in mind. I do want to still look at beans, gold. So today was kind of quiet in terms of alerts. I anticipate getting more active tomorrow, hopefully with better confirmation pattern-wise and price-wise and V-score-wise of what I want. But we'll be day trading in the room again. So please do join me. And in the meanwhile, tomorrow I do want to get back on track with a little bit more of the Forex watch list, because a lot of you said, hey, Rog, one of my best trades was taking advantage of that little move in the pound US to the upside. That was a 50, 60 pip move. You know, that was a really nice move. That's $10 per pip, you know. It was actually more than that. You know, we gotta move. If you took it all the way a little further, you know, we almost went 100 pips. Okay, but that was a nice move. I'm just taking the move to, you know, just about halfway. I know a lot of you took further than that. So we'll definitely have some more of these day trades. And the cool thing is, with the dollar in play right now, Aussie US, pound US, that means that you can trade the futures. Sometimes there's micro contracts available. You can trade the options on the futures, and you can also trade the options on the currency share ETFs, because again, when it comes to the US dollar, we do have the currency share ETF alternatives. Okay, so really interesting day, very productive day. I just really worry that a lot of traders are getting caught up in this bull trap and not thinking about what we know in the room, which is in a double red downtrend, in a downtrend. It's not which low can I buy. It's about which high, which rally can I short into. I think tomorrow might be the day. Let's see what we get. That'll be the daily time frame. But in the meanwhile, we'll stay nimble and we'll day trade again. All right, gang. I'll see you in the next update.